Hello, everybody. It's Michele Brandt here on Monday, January 14th. Keeping warm with a cup of coffee still, even though it's noon. We are here today to talk about down payment assistance. So I think a common misconception out there for all home buyers is that down payment assistance or down payments are required at a great large sum, and you just don't really I'll never buy a house. I don't have $20,000 or $10,000 or any amount of money. And so I'm kind of here to dispel some of those rumors and educate you guys about what kinds of down payment assistance options are available. So the most one, or the most utilized one that I see, is through the Minnesota Housing Finance Agency, and that's called mnhousing.gov is their website. And I've actually pulled it up here to reference back. It's a fantastic website with a ton of great tools and resources. So I highly recommend utilizing that to get some questions answered if you'd like to for starting out. But what you do with the down payment assistance programs is you layer them with regular programs. So when a home buyer is going out looking for a home to buy, they need to get their mortgage pre-approval done. And that pre-approval process is the same if you're doing down payment assistance or not. So you still have to pull your credit, do the loan application, gather the documents, and then it's up to people like me in my profession to determine what the best program is. And if down payment assistance is an option and it's something that you want to utilize, we'll discuss it. We'll talk about it. I like to fully disclose, so we'll talk about the good, the bad, and the ugly. And then we work through what it looks like once you're out shopping for homes and how much it actually is going to cost you and things like that. So the nice thing with down payment assistance is that you do not have to be a first-time home buyer. I had a lot of people in the, we'll call it maybe 2015, 14, they wanted to get into their next level house, but because of the housing crash, they didn't quite have enough equity in order to get themselves to their next move-up house. So they were able to utilize the down payment assistance program with just $1,000 out of their pocket, pay off their current mortgage, and get into a new house without a huge down payment. A lot of people now can use their net proceeds as they're upgrading to the next house. So I'm seeing it more frequently be first-time home buyers or people that haven't owned a home in 3 years utilize it, but it is certainly an option if you're not a first-time home buyer. The income limits are slightly higher if you're not a first-time home buyer, which is kind of nice. So it does allow for some flexibility. They do income limits based on how many people are in the household. So if you are a first-time home buyer and you are looking to buy a house as a single person by yourself, your income cannot go higher than $94,300. That's pretty big. That's a lot of money. So a lot more people qualify than they think. And that's a pretty common misconception. If you want to get, so there's two different types of down payment assistance. There is a monthly loan type, and then there is a deferred loan type with the down payment assistance programs. So first off, you determine with your pre-approval what type of loan you need. Conventional mortgage, FHA, VA, USDA, which one suits your needs best, and that's my job. Once we figure out which loan you need for your first mortgage, we layer that with a second mortgage of down payment assistance. So the second mortgage, the down payment assistance is a second mortgage. It's a mortgage, don't get me wrong. It's not a grant, it's not free money. It is a mortgage, and it goes as second lien position on your house when you close. But the nice part about that second mortgage is that it doesn't necessarily need to have a payment attached to it. So if you're at a certain income limit, you can get what's called a deferred loan, which is up to $8,000, and it's a free loan. No interest, no monthly payments, nothing accruing, as long as you own the home. And then when you go to sell that house, you pay the first mortgage back, of course, and you pay that up to $8,000 back. You don't have to take out all $8,000, just like you don't have to on the other loan we're going to talk about. But that's the highest that you can take out on the deferred loan section. For the deferred payment loan section, 1 to 2 person household in the 11 county Twin City metro area is $68,000. So as long as you, either as a single person or a 1 to 2 person household, are at $68,000 or under for gross annual income, you can get that free loan, $8,000. If you're over that 68,000 but under the 94,300, you can get what's called the monthly down payment assistance. And so that is a second mortgage up to $15,000. So it's almost double that of the deferred. And it does have the same interest rate as the first mortgage and is a 10-year mortgage. So your first mortgage is going to be a 30-year fixed, your set payment. Your second mortgage is going to be the same interest rate as the first, but a 10-year fixed on the second. It ends up being usually between about $85 and $125, depending on how much you borrow. And again, you don't have to borrow the full $15,000. I see people all the time strategize their offers where they'll have the seller cover some of their closing costs, and then they'll have they'll need less of that 15 grand or 8 grand, and they just won't use it. If you don't need it, why borrow it? You have to pay interest back on it. So, so we look at all of those options and we tailor fit it to each and every property that you look at that you have interest in. The rules for getting the down payment assistance, other than income related, are that you have to take a class. You can take that class online. The website is HOC, Home Ownership Center, mn.org. And then you click on first time home buyer, and then the online class is called Framework. It's nice to do it online because you can do it at your leisure. It has to be done before closing, that's a rule. And it's good for up to 1 year after the issuance date of the certificate. So you definitely want to get it done sooner in the process so that you know what you need to know. It's got a lot of good information on there. So the class you can take online, it's called Framework. I think it's $99. You can also go face-to-face. They do have different language options available all over the Twin Cities metro area and beyond. So you'll click on that website, hocmn.org, to be able to find the one that suits you best. So you have to take the class, that's a rule. The other rule is that you have to have at least $1,000 of your own money into the transaction. So you cannot have, you can't get that as a gift. You can get a gift, but you have to have your own $1,000 skin in the game before you can get a gift to layer it on top of the down payment assistance. So I've had people get gifts of $10,000 from family members. They put their own $1,000 in, they do the $10,000, and they get the $8,000, and they just layer that all together to make the mortgage payment that much lower, which is really nice. So, so those are all options that you have. So you got to have $1,000 of your own money in, you got to meet the income limits, and you have to take the first time home buyer class. Other than that, guys, it's really easy. There's a few more forms to sign for the sellers and the buyers, but we underwrite those in-house. I do a few a month. I really enjoy the product, and I think it serves its purpose in the community. So I like to advocate for it when I can. And it's just a great way to get into home ownership. It's kind of your way to ease into home ownership. I meet with a lot of people, and they might have $4,000 or $5,000 saved, which is great. That's a huge, perfect, great start. But if we took all of that and used it for down payment, what happens if your furnace breaks, or if you need a new snowblower, or any myriad of things could go wrong? I don't like to say go wrong because I'm a positive person, but you need to have a nest egg built up. What if you get laid off? You got to make your mortgage payment. So I don't like to utilize that cash unless it's really, really intended for that purpose of just the down payment. Some people want to wait to save up more down payment. I say that's fine. If that is your path, that's your path. I'm not one to judge what people's paths are, but I do like to educate you on what it looks like, and when interest rates go up, you know what that does to affect your cost of buying going forward. So I hope you found that helpful. I love the down payment assistance program. So if you have any questions, feel free to reach out via Facebook. Our contact information is all over this page. We'll post this to YouTube, I think, right, Jody? We'll post this to YouTube so that you can get that high level of information that you are looking for. Thanks so much, everybody. Have a fantastic day.